Now, for more on financial inclusion services, I'm joined by Makada Henry-Nickie. She's the David M. Rubenstein Fellow in Governance Studies at the Brookings Institution. Welcome to the show.
Thank you. Pleasure to be here.
So let's start from the beginning. What sorts of financial products and services would be a good first step for the unbanked?
So I think their bank accounts, obviously. I mean, the evidence I think that links financial inclusion to poverty is mixed but encouraging. So we all think that when we give or enable poor individuals to have access to formal financial services, then we enable them to participate more fully in the economy, and as your previous segment said, access credit and be able to grow and maintain their savings.
Now, a lot of this comes from financial literacy. A lot of times we don't know what we don't know. So how's the banking industry and some of these fintech companies in particular really making sure that people don't get taken advantage of or exploited in their efforts to really try and improve their financial situation?
That's a good question. I think it's important to recognize where the financial marketplace is. So right now, there's a lot of dynamic growth and transition and failures and new startups emerging. And so through all of this activity, it's hard to identify, I think, industry-driven models that are exemplary. So I think the onus and the focus should be on government regulations and efforts and strategies to promote consumer financial protection regulations, that protect consumers against potential harms. And that's increasingly difficult to predict. So I believe we need to focus there.
And are there any countries that are a good example that have really used financial inclusion in education to uplift their communities?
Sure. I think there's been a lot of growth and progress in East African region. Kenya is a notable example. There are really great models emerging in China, India, and Indonesia, as well as the Philippines. So I think there are some great models out there that are leading the way, and we should take lessons learned.
Now, you have the traditional banking sector and you also have fintech companies. Talk about the gap between them and how some of these new fintech companies are really finding opportunities.
So the primary differentiator between traditional banks and fintech companies, in my view, is not technology per se. It's really how fintechs have been able to be innovative and agile in identifying unmet needs and bringing new products to market that fit more closely with what consumers identify as their real and perceived needs. And so I think it's that sort of match. But I think we have to sort of contend with cultural barriers that women disproportionately face. You've got limitations in products that are ill-suited to large populations, like you mentioned, the 1.7 billion that are underbanked, and they have significant financial literacy challenges. And then we have to also contend with physical limitations. So internet connectivity is a huge barrier. And I think, again, the market opportunity is ripe for the picking, but we have to, kind of step through those kinds of challenges to examine or experience the true market potential.
And it's interesting, you mentioned internet connectivity, something that can be an issue no matter where you are in the world. Could that be an opportunity? You see in some of these countries this opportunity to leapfrog those who've never had the traditional banking and now turning to their mobile phones and mobile banking. Tell us about some of the ways that might help with financial inclusion.
I think that's, what we're seeing is a money market, reaching the most remote populations, reaching some of the most challenging populations. And some of these are women who face cultural barriers. So when you think about bringing finance on a personal mobile device, they're able to personalize finance, they're able to make private decisions, and that in itself acts together to, I think, increase in financial inclusion. But again, when you've got physical limitations like internet connectivity that is not consistent, that in itself, acts to counteract the benefits that we're seeing.
Now, in the report, they talked about the need not just for your basic savings account, but other sort of investment opportunities, things like, your pensions, your insurance. How important are those tools?
They're really critical. So I think it's sad that when we think about financial services, and sort of insurance products, we think of middle class and upper income families and ignore the needs, which are very similar for, folks of poor circumstance, to want to smooth the income shocks and to protect against any kinds of catastrophes. So, but the idea here is, the key point here is to make sure that we are leveraging as much data as possible, tracking how these folks are using credit, whether they're using it responsibly and whether they need coaching services. And I think all of that together will help us to inform what kinds of products are best to meet those kinds of savings, insurance, and retirement savings needs.
And we're also seeing the emergence of cryptocurrencies, digital currencies, and not just centralized ones, but also the decentralized ones that everyone talks about, like Bitcoin. What are some of the pros and cons of that when it comes to helping people get their financial inclusion?
So the answer, I think how Bitcoin applies to financial inclusion is largely an unanswered question. It remains to be seen. What I think is promising, though, is the technology behind Bitcoin and how it can enable fair markets, more transparent markets. It can enable more higher quality data collection to inform both smart regulation and help providers understand who their clients are and make products and services match needs better.
Now, it's interesting because according to the World Bank, they said 69% of adults across the world, that's about 3.8 billion people, now have a bank account or a money provider. But experts say it really is a crucial step when it comes to getting out of poverty. Tell us more about that and why we're not seeing more people getting banked at a faster pace.
So I think it's really a question of, is the financial ecosystem producing services and products that are matching their needs? 1.7 billion people have reported, the World Bank reports are unbanked, excuse me. But it's not just who's unbanked and how much, it's what how they're telling us about the barriers that they're experiencing. 60% of those people are saying, I don't have enough money to participate in the financial system. Another 30% are saying, I don't need an account. And 26% say it's way too expensive. So those kinds of reasons to me suggest that we need to make our systems better fit the needs of these populations in order to deepen account usage, for example, and expand the kinds of effects and benefits that having access to a bank account can provide.
All right, certainly lots of good advice there. Thank you so much. Makada Henry-Nickie, the David M. Rubenstein Fellow in Governance Studies at the Brookings Institution.